Tumble out of bed and I stumble to the kitchen, pour myself a cup of ambition, yawn and stretch and try to come alive. Oh. Well, I'm not alive this morning. It's too early. But the show must go on. And what a show it is today. It's not really. It's tax and how I kind of run my tax affairs. Trading. Hi, and a warm welcome to one and all. And for those of you who have not seen me before, my name is Langers, and I am the coffee-obsessed, overgrown child that is the Scruffy Trader. Why am I an overgrown child? Well, take a little look behind me and see what's on my desk. I have everything, loads of toys, and they're all there for a reason. They keep me amused while I'm trading, because trading on the most part is boring, and the subject we're about to talk to is about as boring as it gets. Tax.
No way!
Because not many people look at tax when trading. And why do I say trading's boring? Well, it's not really. I shouldn't really say that. There's a lot of time where you're waiting, so patience is your key, and that's why I have my toys here and I listen to a lot of music. But it is a business, and as with most businesses, it needs to be run correctly, and that means tax is involved. So that is the subject over coffee today. So if you want to see trading in the real world, please click that little subscribe button, smash the like, share the video, all that good stuff, and I'll get on with it. Now this was requested by two members, M&M.
Yeah, thanks for introducing us.
Anything for a friend.
Ooh, strong grip.
Matthew and Maria. So a little salute to the pair of you. And Matthew brought it up first, and he raised a really good question. How does trading affect you in the real world when it comes to getting mortgages and things like that? Because believe it or not, banks don't particularly like day traders. They really don't. So what I'm going to do is I'm going to jump on the whiteboard in a minute. I'm going to go down through the different tax routes that you can take and kind of give you an insight into the way that I do mine to a degree. A very watered version. Because like I say, tax, it's not exactly the most exciting subject in the world.
Are you serious?
And let's be honest.
You ding dong!
Give it to me again.
You ding dong!
There's no way they're going to tell you about the tax implications. Why? Because I don't even think they know what an RSI is, let alone know how to trade and run a business. Sorry if that sounds a bit crude and horrid, but that's just my personal opinion. I've been in business over 20 years, and I've had good times, bad times, horrendous times. And that's the nature of working for yourself. And would I change it? No, not in your Nelly. Why? Because being self-employed, whether you go down the limited company route or just simple self-employment, it's one of the greatest pleasures you can have. Simply because it is freedom. It is freedom from being a slave to the machine. And what I mean by that is, you can do what you like when you want, but you only get out of it what you put into it.
Isn't that logical?
If you go into business thinking, right, that's it, I'm in business, therefore I am rich, you're probably going to get rudely awakened very quickly, because there's a lot of hidden costs that nobody knows about. I used to have a lad work for me when we had the factory, and it did very well. I mean, it was a big factory, there's 17 staff, and it had a huge turnover. But there's a big difference between turnover and profit. In fact, there's a huge difference between the two of them. The uneducated, and what I mean by that is those that have never really run a business, assume everything you take through the till is yours. It is not. It's not even close. You only get a small percentage of it, and that's your profit. And that's kind of how trading works as well. Because believe it or not, you have a lot of time invested in trading. Time costs money. So if you're working it out as a job, you need to kind of work out what your hourly rate is. If you're trading for 8 hours, and you're 10 quid an hour, it's 80 quid a day. Simple stuff. That sort of thing. Electric to run your computer. The computer itself, the phone line, space within your house, all costs money. And you need to add all of this together. And as I was saying, I had a lad work for me and he couldn't put the two together. We took one weekend over £30,000 through the till. Big mail order company and everything went through. And he naturally assumed I made 30,000 in the weekend. And he was having a right cob on. And I was like thinking, well, first of all, it's my business, of course. It's mine. You work for me. I pay you a salary. And I paid them well and looked after them. But he thought I was being greedy because I got 30,000 a weekend. What he didn't realise is we made less than 10%. So the cost of that weekend was 3,000 gross. Then out of that, I had to pay the staff, had to pay the building, I hadn't been paid myself. Lots of different little costs used to come out of it. And he just couldn't get it through his head. I was like trying to say, no, we've made about 3 grand. No, you made 30. No, we've taken 30, we made 3. Because we only make, after product cost, postage and packaging, about 10%. Alright? And then out of that 10%, you need to take out your other costs. And he just couldn't get it. So this is something you need to consider if you are going to set out on a path of self-employment. And the other side to the question was about mortgages. Now, when I'm on the board, I'm going to touch on that because it is a strange subject in itself. So let me jump on the board and I'll do the tax figure breakdown. I'm based in the UK, by the way, guys, and this is kind of where it is for myself. And at the time of the video, it's roughly about right. Personally, I have an accountant does everything for me. This is just kind of the way that I interpret. So let me jump on the board and we'll have a little chat.
Well, we're waiting.
Okay guys, so on the board behind me is a bunch of figures, and I've kind of put them together, as I say, for Matthew and Maria. So I'm going to give a little salute again, because I'm going to pick up on something that Maria put in her comments from the last video, where I told a little story about Winky and Lucky At towels. Well, Winky watched it, and apparently they're not called Lucky At towels. They are called show towels. Don't get it. And then Maria chipped in saying, that is perfectly correct. Women have weird ways. No, women are nuts. And I know that's not politically correct, but that's why we love you.
Are you trying to get a rise out of me? Are you happy now?
Not so sure about the other way around, because women are from Venus, men are from Mars. Anyway, let's try and make some sense out of this tax. If you're looking for a loan, whether it's to buy a car or sort of mortgage, whatever, the financial institute is going to want to know you have a stable income. Now, in the eyes of the world, day trading and speculative trading is not deemed stable. So if you're putting on your application you are a day trader, you might be raising a red flag unnecessarily. The way that I get round it, we have a business that my trading is tied to. I funnel my profits into an overall business that Joanne and I have, and it just becomes part of that, and it's a limited company, and I'll touch on that in a second. So in the eyes of the world, I am just sort of somebody who works for a limited company. I am an employee as a manager. You may put on your form, you are a financial analyst. It's all in the wording, guys. But it is correct. You are a financial analyst. You are analysing a financial product and you're getting paid for it. Very, very simple. Okay, so that's one of the first things you want to look at. Because if you do not declare that you have a stable income, you are, well, basically you're unemployed. And that is it. Poof, game over. If you're unemployed, you do not get a loan or a mortgage. So you need to consider that. Now, I'm talking as if you're going to be a full-time day trader. Okay. Now, there's various avenues, routes, capital gain tax that get involved, but I'm going to look at it as if it is ran as a business. Now, if you're just a speculative day trader and you live in the UK, remember that, guys, I am UK based. There is two real formats you can trade. One is spread betting, where you are just basically placing a trade based on movement. Is this instrument going to go up or down? And I know that's what we're doing anyway. But in the eyes of the law, it is classed as a gamble, and therefore it does not incorporate any tax liability. However, there is a grey area, because if you're constantly relying on the profits of it, the Inland Revenue will deem you as self-employed and tax you accordingly. But they assume that most day traders lose money, which is why it's essentially tax-free, the same as gambling. Now, the other side of it is CFD, contracts for difference. From day one, they are taxable. Now, not only can you offset your losses against your tax bill, so even if you're a speculative day trader and you're making a lot of losses, sometimes it's quite sensible to be a CFD trader because you can claim back your losses against your tax bill. Simple stuff, but you'd need to go down a few rabbit holes, get an accountant to do it for you, because it does get a bit complicated. But we're going to assume that you are reasonably stable, you've got decent growth, and you are making money year on year, and you want to be, I don't know, a homeowner. So you need a mortgage. So in the eyes of the law, you need to register as a business. And there's two ways you can do it primarily. You can go down the route of self-employed or limited. So the flow chart is looking a little bit like this. If I am speculative and I'm not making that much money, what I mean is under 20,000 a year, spread bet. It's tax-free and you can do it alongside your day job, no liabilities whatsoever. If you are starting to step up a little bit, you can stay as a spread better, but your profits are still going to be taxed. Okay, and I'll get into that in just a sec. Or you go down the route of CFD, contracts for difference. Now, on the face of things, they trade pretty much the same. Out of the two, the easiest one to trade is spread bet, because it's price per point. You're not having to work out contracts, you're not having to work out exchange rates, anything like that. It's just £1 a point, 50p a point, whatever you want. Very, very simple. But if you are wanting a good broker, one thing and another, do look at the partner of ours, which is BlackBull. Good leverage, tight spreads, all that. Pretty cheap to run as well. Links in the description below. Why do I pick on them? Because I trade with them as well as IG. Okay, so that's kind of the way that I go. Now, from there, you need to decide, are you going to be a limited company or are you going to be self-employed? I've gone down the limited company route, and I'll explain that in a second. But if you're self-employed, the figures work pretty much like this. So you register with the HMRC as self-employed. They'll give you sort of tax code, and the tax works like this. Your first £6,500, it's roughly 6,475, is tax-free. Okay, pay no tax on that whatsoever. Up to 37,400 thereafter, you will pay 20% in tax. Over 37,400 to 106,125, you're at the 40% tax rate. And then 150k onwards, it's 50%. And I know you think, that's crap. Why do I have to pay that much money? Even if you work for somebody, you go up through the higher bands. The difference between self-employed and employed is, if you're employed, you will get a tax liability. It's around 12,500 tax-free. And then you go up through the bands and you pay more tax. But that's it. When you're self-employed, you can reduce your tax liability by claiming things. So you'll be able to claim working at home. So percentage of your house, you can claim back. Claim back subsistence. You know, if you go for a meeting, you need to get there and you need to eat. If you're away from your normal workplace, you can claim things like that. Workwear. If you have a logo on your work clothes, claim them as well. Claim anything, telephone call, you name it, brings your tax liability down. Okay, and that's kind of what you do. And self-employment is, well, it's the easier of the two, but it's not the most cost-effective. The most cost-effective is being a limited company. Now, when you've got a limited company, you can do, like we have shop, property, various other bits and pieces. It's all under a single umbrella. All right, so we can have income streams coming in, and when the bank looks at it, they just see me as a manager of a limited company, director, whatever you want to call yourself, and that company made X. And if you have it as a general asset company, in other words, it has multi income streams, it's all not really shown as a day trader. It's just a multi-asset company. So you can have retail, you can have wholesale, investment, property rental, all that sort of stuff, all under a single umbrella. And it makes your figures go up and also makes the company look pretty solid. Another thing I would suggest as well is do have other streams of income, because trading, for all I'm pretty successful at it, it does have its moments, and there are times where those moments cost a lot of money and it can wipe out your entire wages for a month. You need something else to fill that gap, and it's kind of why I don't drive a big flashy car and one thing or another. I've gone through that road in the past, you know, and it costs a fortune, and when things are hard, those things that cost a fortune become an albatross around your neck. So everything Winky and I own, we've paid for outright. We finance nothing. Even the house is nearly paid off, and we're currently looking for a new house, and we're going to pay cash for it. And then it just means when the money comes in, we're not really worried. Okay, but that's just us. Now down this side, it works very simple. Now the company itself, up to £30,000 worth of profit, will pay 21%. Okay, that's the company. Again, you can claim everything. You name it, you claim for it. Brings that liability down. You pay yourself a salary as if you're an employee on PAYE. So you are not only getting the company tax breaks, you are getting personal employee tax breaks. And current rate is just shared on 12,500 tax free. So that makes life easier. But then it gets a little bit better, because I pay myself just minimum wage, lowest band, so I can cover the tax-free element. The rest of my salary is made up by drawing dividends. Now a dividend I can draw out 2,000 tax-free. So I've now got 14,500 tax-free. And then the dividend tax liabilities are a little bit cheaper as well. because up to 37,500 it's only 7.5%. 37,501, 32.5, and then that goes up past 150,000, 38.1. So it's actually more tax efficient to be a limited company than it is self-employment. But then there's a little bit of a kicker, because if you are self-employed and you're making money, the government don't just stop there. You have to pay your national insurance.
What?
And your national insurance for company wise is what's called a class 4 national insurance, which once you've made more than 5,715, you're going to pay 8% on the profit, up to 43,875, and thereafter that it drops back to 1%. So there's a lot of tax implications involved in trading. It ain't just rocking up and milking the cow. It really isn't. And trust me, you start funneling money into your bank, which you will, you have to, because it's all electronically transferred. The bank has a moral obligation, and they do, pass all your financial details over to the Inland Revenue. And if you haven't declared it, you're going to find that they will be knocking on your door, giving you a tax inspection.
Cheeky fuckers.
And that is something you never ever want to go through. Many years ago I went through a VAT inspection. All limited companies get them. It's normally once every 5 to 7 years. It is horrific. There's nothing wrong, even though your books are perfectly right. It just feels like you sort of everything you do is under scrutiny, and that's just a normal one where they just practicing and coming along to make certain you're doing what you like. They think you're doing something naughty, they will do a financial profile on you, and it's not pleasant. Okay.
If you can't take a little bloody nose, maybe you ought to go back home and crawl under your bed.
Okay. So that's tax as it is for myself. I think that might have been as clear as mud.
You serious?
But ultimately, what I'm driving at is, if you are making it, register yourself as self-employed or a limited company. If you're making good money, and I mean you're going 50,000 plus, limited companies seem to be the best option for us. If you're below that and you're quite happy, steady away, self-employed. Both of them will give you a decent set of books, and when you go to get a mortgage, those books will be represented as a legitimate business. And that's it. So best of luck, guys. I hope that makes sense. By all means, contact me, one thing or another. I am no financial advisor. This was purely my take on it. If I am wrong, by all means, pull me up on it. But the way I get around it, my get out of jail free card, if you like, is I have a very good accountant I've worked with for over 10 years. He keeps me on the right side of the law, and it's the best 70 quid a month I spend, because he just does everything for me. I just give him my spreadsheets at the end of the month, and he just looks after it. Simple stuff. So there you go, guys. Trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.